Hello everyone, welcome to Options with Doug. Streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. I'm also on X, formerly known as Twitter. My name there is @DougPless. Here are the key tenets of my approach to trading. This is the basis of my approach to trading. First of all, I believe options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks that I follow and trade, as well as the equity futures, the S&P 500 and NASDAQ. And for the S&P 500, SPX is the underlying index, and SPY is the ETF version of that index, and ES is a derivative of SPX and SPY. So when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the ETF version of that index, and NQ is a derivative of NDX. And when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow on Bookmap and real-time market maker hedging flow on Spotgamma Hero to confirm my thesis, and for setups for entries and exits. And when I talk about setups today, I will be focusing on an underlying asset, and setups in that asset can be taken any number of ways. For example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. Hello, Stephen. Welcome. Glad you're here. Hello, Sheena. NC40G. Welcome. Glad you're here as well. And hello, Zuko. Welcome. Glad you're here. All right, here's my agenda for today, Tuesday, March 12th. First of all, I want to go over news items, economic data, and events for today, as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know, and I'll be glad to do that. All right, let's get started with economic data. Oh, hello, Dan P. and Anurag. Welcome. Glad you're here. All right, so let's get started with news items, economic data, and events. So big economic data released today. That is the CPI data that came out at 8:30 a.m. Eastern Time. So let's take a look at that. This is the CPI data, the year over year, month over month core, and the total CPI generally came in greater than expected and greater than or even equal to the previous number. So go figure. the market rallied after that. So again, CPI data came in a little bit hotter than expected, and the market shrugged it off. All right, so this is the ES futures and Bookmap. Let's just take a look at the reaction to that data. So initially there was a move down right around this SPX 515 level, noted as support in the Spotgamma AM Founders Note, and then a SPY 511 just above that. And then the market moved back down, and then at the cash open found support right around that 515 level again, and then has rallied up all the way up to the upper daily expected move, and also this SPY 515 combo 3 level. I'll talk more about those levels in just a minute. And note at 1 p.m. there was a 10-year note auction, and there was not much of a market reaction to that 10-year note auction. All right, for the rest of the week, tomorrow, Wednesday, there is another bond auction, a 30-year bond auction at 1 p.m. Then on Thursday, PPI data comes out at 8:30 a.m. Eastern Time. Also retail sales at 8:30 a.m. Eastern Time. Then Friday is the big monthly options expiration, and that is also a quarterly options expiration. Those are the largest expirations, typically March, June, September, and December. And this options expiration is quite call dominated. I'll talk about that more later on in the week, and we'll take a look at the expirations again later on in the week. All right, let's move on to positional analysis now. So again, this is the S&P 500 futures and Bookmap, the ES futures. And before I take a closer look at this chart, I want to take a look at a larger time frame, and I'm going to step back and take a look at the underlying index, again, which is SPX. This is a one-day chart, and think or swim. The current rally began last year, October 30th, and so far SPX has rallied up about 1,080 points. So very strong move higher in SPX. Now let's take a look at the upper part of that rally. This is a 30-day 1-hour chart. So this is the trend line that we were just looking at on the one-day chart. The top of the high of the for SPX so far 51.89. SPX trying to make its way back up to that level. All right, during this year 2024, the SPX call wall has moved up from 4,800 at the beginning of the year to the current level at 5,200. I'll talk more about that in just a minute. All right, let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. That's updated once a week. That's based on the closing price on Friday. And the dashed blue lines are showing the lower and upper daily expected move. Also based on the options market, based on the closing price yesterday. Note that expected move for today was quite large, right around plus or minus 48 points. And I post those numbers in Discord every evening the day before. So yesterday evening I posted the expected moves for today. And note that SPX did trade up above the upper daily expected move earlier today. All right, the other lines on this chart are Spotgamma levels. These are levels that are provided to Spotgamma subscribers. They are shown on a variety of trading platforms. This is Thinkorswim. I'm going to point out the key daily levels, and note these levels are based on gamma weighted open interest. So again, the key daily levels, first of all, the put wall, that's at 4,900. That's a strike where the largest net negative gamma that can be expected to act as support. That level did move lower from yesterday. It was at 5110 yesterday, not a very convincing put wall level, and the put wall now has moved down to 4,900. The next level up is 5,000. That's the absolute gamma strike. That's a strike where the largest absolute positive and negative gamma. That's where most of the gamma weighted open interest is concentrated. Above that is the volatility trigger VT there. That's at 5,095. And then a Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price dash their delta exposure. That tends to enhance or increase volatility. Above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price dash their delta exposure. That tends to subdue or decrease volatility. And note that SPX is trading above its volatility trigger. Finally, the call wall that I mentioned before, that's a strike where the largest net positive gamma that can be expected to act as resistance. And the call wall for SPX has been at 5,200 for several weeks now. All right, potential floor at 4,900, potential ceiling at 5,200. And the volatility trigger also shifted lower from yesterday, from 5145 to 5,095. All right, let's wrap up our view of SPX with a 1-minute chart. 1-minute chart. This is showing the reversal from last Friday. So the dark shaded areas are showing the regular trading hours. And yesterday, the low of the day was just a little bit below the zero gamma level. That was at 5,094 yesterday. And for today, as I mentioned before, SPX did trade above its upper daily expected move. Looks like it may be heading back there again. All right, so those are levels in play for today in a 1-minute chart. All right, let's take a look at Bookmap now. Let's zoom in just a little bit. In Bookmap, I have my own cloud notes, so I can show SPX levels. Here's that 5115 support level that I mentioned before. Here's the 5150 level that was noted as resistance in the Spotgamma AM Founders Note, also the 5160. And then I have SPY levels on this chart as well. This is, I usually just show the round number levels, but this combo 3 level was in play for today. So that's showing SPX and SPY gamma weighted open interest combined into one level, converted to a SPY price, and then converted to an ES price. I did that. All right, so I've got SPY levels, SPX levels, as well as key levels for ES, like the upper daily expected move and the 5,200 level. Note there is a difference in price between ES and SPX. And that difference today is right around 66 points. So ES minus SPX equal 66. So I'm showing the SPX 5150 level at ES 5216. Note that I am also using the June contract. So I have rolled over to the June contract. This is just one of many reasons that I use the look at the underlying index as the basis for trading. All right, just quickly, for those of you who may not be familiar with how to roll in Bookmap, what you do is, so I closed out the March contracts already, but what you would do is two-step process, very simple. First of all, you need to subscribe to the new contract. I've already done this, so I'm just showing this as an example. Well, you can just type it in here. So you just type that in and you subscribe to it. Again, I've already subscribed to it. Here it is. So once you do that, then what you want to do is go right click, chart settings, inherit chart settings from. So I've already deleted the March contract, the ESH4. Normally, if I had not done that, it would appear on this list. You just select that and you inherit all your settings from your previous contract. So very easy to roll over in Bookmap. All right, so Bookmap, the levels in play for today, primarily this SPX 5115 level, also the SPY 511 level, round number level, acting as support, and then this cluster of levels acting as resistance earlier today. That was the SPY 516.36 level, and also the upper daily expected move. And then that is also an SPX level. Let's see what, we'll zoom in, let's see what that is. That's this 5174. That's a combo 4 level. So again, combining SPX and SPY gamma weighted open interest into one combined level shown with an SPX price and then converted to an equivalent ES price. All right, so that range of levels acting as resistance. All right, let's move on to NASDAQ. So this is the NQ futures in the Bookmap. And before I take a closer look at this chart, I want to take a look at the underlying index charts. I'm going to start with QQQ. Dark shaded area is the regular trading hours. QQQ volatility trigger 437 acting as support after the data release and then after the cash open, more or less acting as support. Then the 443 acting as resistance. Note the 440 level is the absolute gamma strike. That did briefly act as resistance right at the cash open. Also on the initial move higher, now acting as support. So the 440 level in play. Also note 439 as the call wall. So QQQ is trading above its call wall, also above the absolute gamma strike and the volatility trigger. Let's take a quick look at NDX. NDX reversal higher on Friday, chop yesterday. Now NDX is trading above the 18,000 level. All right, back to Bookmap, NASDAQ futures. Looking at levels in play, not clean support, but good enough for NASDAQ. The 437 volatility trigger, QQQ, that was also noted as support in the Spotgamma founder's note. And so far today, the 443 level, also the 18,450 level acting as resistance. Then, as I pointed out before, the 440 level has been in play as resistance, then support. We'll take a look at setups in a few minutes. All right, shifts in levels. I forgot to mention for SPY, both the volatility trigger and absolute gamma strike shifted lower down to 510. NDX, there were no shifts in levels. And for QQQ, the volatility trigger shifted lower. That's again that 437 level. Put wall shifted higher, and the call wall shifted lower, down to 439 from 450 yesterday. All right, so net overall, the shifts in levels were slightly lower for both the S&P 500 and NASDAQ. And of course, that is before the CPI data that came out this morning. All right, again, we'll take a look at setups in a few minutes. Let's wrap up positional analysis by taking a look at gamma notional first. This is market maker's position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, and Russell 2000. Note all these numbers are positive. What Spotgamma assumes in a positive gamma environment that traders are short calls, market makers are long calls. Hence the positive gamma, they have to trade against price to hedge their delta exposure. So this is at the beginning of the day. Note all these numbers did shift higher from yesterday. Let's take a look at one other thing that was in play for today. This is SPX, the Vana model. What this chart is showing is market maker's delta notional on the vertical axis, spot price for SPX on the horizontal axis. There are two curves on this chart. First of all, the light gray curve shows how market maker's delta notional may change with changes in price only, and the purple curve adds implied volatility to the equation. That shows how market maker's delta notional may change with changes in price and implied volatility, and that change in delta with the change in implied volatility is the Vana effect. All right, let's take a look at some prices for SPX right now. So the low of the day for SPX was right around 51.15. All right, so somewhere between these two lines. So it's not significant, but what this is showing, as price has increased from that low of the day, market maker's delta notional has decreased, and they can buy back short futures. That's a put Vana rally. Not large, but definitely playing a factor. That's a factor in play for the rally today, that put Vana rally. Let's take a quick look at VIX as a proxy for implied volatility. And after a quick spike up right around 945, and we'll see that was when things started moving up. VIX falling, price rising, market makers can buy back short futures, helping to fuel the rally higher. So again, a little bit of a put Vana rally, put Vana fuel in the tank for the rally today. All right, so that wraps up my positional analysis. Now let's take a look at some setups. So everything that we've looked at so far, other than the Bookmap, is based on static data. The levels on the charts. That's based on static data. Spotgamma takes open interest that's updated once a day sometime during the night. They apply their algorithms to that data, come up with the levels. Those levels change a little bit every day. That's why I look at them every day and track them to get a feel for how traders and market makers are positioned in the options market. And so anyway, now let's move on to real-time data. So the first thing I wanted to do is take a look at what options traders have been doing today. Excuse me. All right, so this is the hero signal, hedging impact real-time options. What this chart is showing is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. So I'm going to start with the S&P 500. The purple line is the hero signal. A rising hero line indicates traders are taking positive delta options positions. They are buying calls and or selling puts. Market makers take the opposite side of that, and they have to buy futures to hedge their delta exposure. So again, when traders are buying puts and calls, or buying calls especially in this case, in SPX and SPY, market makers take the opposite side of that, and they have to buy futures to hedge their delta exposure. Note the hero signal has been moving higher almost all day, beginning, let's zoom in on this. Beginning right around 9:45. Remember, that's when the VIX started to move lower. 9:45, hero signal reverses higher. Traders are taking positive delta positions. All right, I'm going to separate out puts and calls now. I'm going to have to jump to another chart to avoid the auto zoom bug and go back to S&P 500. Let's zoom in on the morning. All right, so right around 9:45 to 9:50, the orange line is showing calls. So up until about 9:50, it was pretty flat. Then traders started buying calls aggressively. That's shown by the rising orange line. Also, a few minutes before that, they briefly started selling puts. That's shown by the rising blue line. They resumed buying puts. That's shown by the falling blue line. But call buyers were in charge. All right, let's go take a look at Bookmap. Go back to ES. Let's zoom in. All right, so let's take a look at the order flow in Bookmap. So we know traders started taking positive delta positions somewhere between 9:45 and 9:50. VIX started dropping. The volume dots in Bookmap are showing market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. So the aggressive buyers started to come in again right at that 51.15 level. Let me darken up the heat map a little bit. The heat map is showing a history of the limit orders in the order book. Note the band of liquidity here. Traders were front running that liquidity. Below price, that is those are buy orders, limit buy orders. Again, the heat map showing a history of the limit orders in the order book. Aggressive buyers start to come in When price starts to move higher, buy stop orders help to fuel the move higher. That's shown by the rising yellow line. Also, the magenta line is cumulative volume delta. So both cumulative volume delta and buy stop orders, so aggressive buyers, buy stop orders, and call buyers all driving price higher. And all the way up to this SPY 516 level, just below the upper daily expected move. All right, so that's the long setup in the S&P 500. Let's take a look at NASDAQ. Go back to Hero. All right, so overall for today, what this is showing is traders are buying puts. That's shown by the falling blue line. Looks like they have taken their foot off the gas right around 12:20, 12:30. That put line has flattened out, and ever since 9:50, they've continuously been buying calls. This number is very large. That's delta notional value, 7.32 billion. That's a very large number. Traders aggressively buying calls. All right, let's take a look at NASDAQ now. And for NASDAQ, I look at this MAG 7 signal. Let me show you what this is. This is another combined signal for the stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. These stocks make up a very large portion of the NASDAQ 100. So when I'm trading NASDAQ, this is what I look at. And it's been a very good directional indicator for the NASDAQ. All right, so in the case of the MAG 7 signal, we'll zoom in on this. Right around 940, 945, 950, traders started buying calls and selling puts. That's shown by the rising orange line and the rising blue line. When both lines are moving in the same direction, that's a very powerful directional indicator. But call buyers definitely in charge today. Very typical pattern. Somewhere mid-morning, mid to late morning, they take the foot off the gas. Price moves lower. Then just after, looks like around 110, they start buying calls again. Price moves higher. This price is shown in terms of QQQ. These are QQQ prices. All right, let's go take a look at NASDAQ. Zoom in. Very similar read on order flow compared to the ES. Aggressive buyers start to come in, shown by the green volume dots. As price moves higher, buy stop orders shown by the rising yellow line fuel the move higher, as well as cumulative volume delta aggressive buyers shown by the dark blue line. All the way up, close to the upper daily expected move again for NQ. And remember, the MAG 7 signal consolidated. Price moved lower, back down to the 440 level, QQQ 440, and now is moving higher again. Let's go back to Hero. All right, let's take a look at some stocks. First, I want to take a look at AMD. Zoom in. So at the open, AMD made a sharp move lower. Note this floor alert that comes in maybe around 9:44. Shortly after that, traders start aggressively buying calls, start selling puts. AMD reverses higher. Again, orange line, blue line moving the same direction. Very powerful directional indicator. Typical pattern. Call buyers take their foot off the gas. Put line flattens out. Price consolidates. Let's go look at Bookmap. Go to AMD. There's the sharp move down at the open. Traders start buying calls and selling puts. Price reverses higher. Nice pullback to 197 for a long entry. Next is Amazon. Actually, we'll take a quick look at Amazon. So note, as opposed to AMD, there were a lot of aggressive buyers here in Amazon. Note all the green volume dots. That's very bullish order flow. CVD rising, shown by the dark blue line, then leveling off as price consolidates. So aggressive buyers definitely in buying Amazon. Let's see what options traders are doing. Let's go to Amazon. Call buyers, shown by the rising orange line, driving price in Amazon and above the call wall. 175 call wall, key gamma strike. Note that when price does breach a call wall, remember, for a stock, Spotgamma assumes that traders are long calls, market makers are short calls. As price moves above that high level of concentration of calls at the 175 level, those calls go deeper in the money, their delta is becoming more negative, and market makers have to continue to buy stock to hedge their delta exposure. And Daddy Longlegs, welcome, glad you're here. Go ahead and post your questions about Hero and Bookmap. I'll be glad to answer. All right, so there's Amazon, another bullish setup. Let's go to Meta. Very bullish setup in Meta here. Zoom in a bit. Call driven. And in the case of Meta, traders are buying calls from the open. Sharp move lower down to the 485 hedge wall, and price reverses higher. As traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. 500 is the call wall, key gamma strike. Meta does break above that level, but that's where the options traders, the call buyers, pretty much take their foot off the gas. Hello Caesar, welcome, glad you're here. Again, the very typical pattern for these large cap tech stocks. Call line remains flat. Meta drifting lower. Let's go take a look at Bookmap. Let's go to Meta. So here's the initial reversal higher at the 485 hedge wall, then a pullback just a few minutes later to 487, good long entry for a move up above the up to and above the 500 call wall. Great move in Meta today. Over 15 points from low to high. All right, Microsoft. And again, remember there was an alert as well to get your attention. That's what I saw. Here's Microsoft. Let's go take a look at back to Hero. Let's go to Microsoft. Another flow alert. Traders buying calls from the cash open. Looks like a reversal at the 405 or a move higher from the 405 hedge wall. 410 the key gamma strike. Typical pattern. Call buyers take the foot off the gas. Price consolidates. Start buying again at around 1 p.m. Come back from lunch. Start buying calls again. Price moves higher. So there's Microsoft. Pullback entry. Call buyers take the foot off the gas. 1 p.m. they start buying calls again. Price moves higher. And let's wrap it up by taking a look at NVIDIA. Anurag asks, what does flow alert mean, please? Flow alert is a signal for significant options activity. So that's what it means. I use that to get my attention. So one approach is to, we'll take a look at this in just a minute. So one approach is to look for alerts in the morning to get your attention. So I'm looking at, you can see all the stocks that I'm looking at in the morning. Looking at all these stocks. I'm mainly trading stocks now, but certainly futures and NQ, ES and NQ futures as well. So I'm looking at a lot of stuff, and the Hero flow alerts get my attention. So again, signaling significant options activity. All right, so here's NVIDIA. Let's see what options traders are doing. Move on to NVIDIA. Starting around 9:45, 9:50, traders start buying calls. There was an alert earlier, then one after call buyers came in. Note they were also selling puts. Blue line, orange line moving the same direction, and 900 is the key gamma strike call wall. Call buyers take their foot off the gas. Also put sellers. Blue line flattens out, and price consolidates. So the NVIDIA did breach above its call wall key gamma strike. Let's go back to All right, so 900, the call wall, key gamma strike. Pullback entry earlier in the morning down to 875, just above VWAP, shown with a light blue line. All right, let me take a look for questions. All right, Anorak, ask if there are so many levels on ES that we mark, does that not get confusing? Yeah, it can be. Let's go take a quick look at ES. All right, so when I'm trading, and this is pretty good movement for ES, pretty wide trading range. So often there are not so many levels in play, but today that is just the case. So when I'm trading, I'm zoomed in a lot closer than I normally show. Let me tone down the heat map. This is pretty typical in rollover period. This cloud of liquidity above and below, that should disappear next week. All right, so that Anurag, that's one reason that stock trading may be a little bit easier. All right, and Anurag also asked, would it be call or put activity? I assume you're referring to the hero flow alert. It could be either. So all I know is that it signals significant options activity, and it's a good way to get my attention that traders are aggressively buying or selling puts and calls, and it's something that I want to take a look at. All right, Katinga asked, hello, welcome, glad you're here. Great market analysis, thank you. How would you apply the movement to actual live trading? Do you just look at the respective directions to make a movement prediction? Well, what I'm doing is, let's go back to Hero. So I'm looking at 3 charts when I trade. So I have Hero on one screen, Bookmap on another screen, and then I have a chart like this on another screen. So I can see the movement of all these stocks. And then I'm looking for potential setups in primarily Hero first, but I'm also looking at all these stock charts. And then let me zoom out. In the morning, I'm looking at these alerts for my watch list. So let's take a look at this for Hero. All right, so that's a flow alert. Let's go back to the total signal so that won't get confusing. I'm going to have to jump back. So this is alerts for my watch list. Let's take a look at snow. Often these alerts can be mean reverting. So this is snow. Let's go take a look. So I see this. We're a little bit late. So about an hour late on that. That rolled off. So let's go take a look at snow. So I see that alert. I look at the Hero signal. It's rising. They came in at 123. So this is snowflake. Zoom in a little bit. So that alert came in somewhere in here. So at that point, I would be looking for a long entry, a pullback to get long. I see that, first of all, the hero signal was rising, cumulative volume delta rising. It looks like price is reversing higher at this 160 level, looking for a pullback to get long. At this point, I'm using the continuation pattern that Bruce has talked about in the Learning Center, Bookmap Learning Center. There is a video on chart patterns, and there may be another pattern. There may be a reversal pattern, and anyway, there is a continuation pattern, and this is not real clean, but I'm just looking for pullbacks to get long. So I saw the alert. I see that hero signal is rising. Snowflake has made a move down, looking for a potential trend break. There it is. Price is reversing higher. Cumulative volume delta is rising. There are aggressive buyers coming in, shown by all the green volume dots. Again, cumulative volume delta rising. I'm looking for a long entry. So that's my approach to how I can trade a number of stocks. All right, Daddy Longlegs asks, how to use hero signals and Mag 7 trading for SPY or ES with confidence. I really look for ES or SPY for the S&P 500, whichever form I'm trading. I'm really looking at this signal, the combined signal for the S&P 500. All right, so this provides overall typically the best signal for the S&P 500, and for the NASDAQ, I'm looking at the Mag 7 signal. All right, so again, my approach in the morning, I have my watch list. So this is exactly the view that I have for hero in the morning, looking for these alerts. Often they come in on the first 15-20 minutes in the morning when traders are aggressively taking positions. So then let's go back to Meta. So Meta, two ways to take this trade. First of all, you see the flow alert, rising hero signal, looking for a long entry, looking for a deep pullback. There it was, I showed that. Another second way to play this is look for the very typical pattern for options traders to take their foot off the gas. A couple of ways of playing that. Probably the best way is to take what Spotgamma calls a not bullish position. Sell a call vertical, buy a put spread above the call wall. So perfect example for Meta here, taking a negative delta position that's defined risk, and all Meta has to do is stay below that level. So if you trade, take like a 505, 510 call spread, sell that. All Meta has to do is stay below that level for you to make full profit on that position. All right, let's see. Daddy Longlegs ask about Oxy. All right, Anurag, I'll get to your question in just a minute. So first of all, Oxy. Let's take a look at that. All right, Oxy, I do not have that in a Bookmap. So just based on this is not a recommendation. I would be looking for a long entry, a flow alert here, another flow alert. This rising hero signal, sharp vertical line, indicates large block orders. But this is not a stock that I would trade. This is very small. Remember, for the S&P 500, for calls alone, the delta notional value was positive 7 billion, and this is 2.32 billion. So I would not be trading Oxy. And let's see. So here's that alert that came in for Oxy. So I'm just watching my watch list. There are just too many alerts that come in. All right, KP wants to take a look at RTY. Oh, here's the, let's take a look. We can take it. So yeah, the Russell future's not in there, but this is a combined signal of RUT and IWM. So not much to see here. This is one of the reasons that I don't trade the Russell 2000. So again, this is a combined signal of RUT and IWM. Not much to see here. Pretty small notional value. Let's just take a look at IWM. I have not found over time that there's a very strong correlation between options trades and market maker hedging activity. Not enough to make me spend any time looking at it. All right, Daddy Longlegs asked, how do you interpret the chart? What is your process for deciding long or short or do nothing? All right, so let's go back. All right, so that one's a little bit confusing. Let's go back to Meta. So first of all, for Meta, I know the typical pattern. Aggressive options traders in the morning. Meta moves higher. So I see the rising hero line. You know, definitely safe to wait for a pullback, a deep pullback right there. So in Meta, I see the rising hero signal. Traders are taking positive delta positions. They're buying calls. Market makers are selling the calls. Price moves higher. All right, so that's my process. That's how I decide long or short. All right, then Anurag asked about, says, this is excellent information. Thank you. Show how to find the daily and weekly expected move in Thinkorswim. All right, so let's go take a look at that. All right, so this is SPX. I'm going to go to the options chain. All right, so this is tomorrow, 13th of March. And here I'm looking at, here's the expected move. Now, I don't take this information now. I take it at the close at 4:15 p.m. Eastern Time. So that's when SPX closes. So I will get the closing price, again, at 4:15 p.m. Eastern Time. And then I'll take this number, whatever it is. Let's say it's plus or minus 30. Then I'll subtract and add 30 to the closing price to get the daily expected move. And the same for the weekly expected move. So I do that. So on Friday, I'll get the weekly expected move. So look at the closing price on Friday and then the expected move for the following Friday. And note for the monthly expirations, you always want to look at the number for the weeklies. For SPX, there's still an AM settlement, that's the traditional settlement, and a PM settlement. So for the monthly option expirations, I'm looking at the PM settlement. That will be noted as a weekly. All right, so hope that answers your question. All right, let me check for questions. All right, Rainy Days asks, if a ticker is below its previous close price and Hero gives a buy signal flow alert, how would you handle that? So I really don't look at the previous close. So let's take a look. Let's go back to Snow. All right, so Spotgamma does note that price in the Hero chart there. It's not something that I put much weight on, that closing price. All right, Abu asked, do you announce the SPY and QQQ level early in the morning before market opens? The information that I put in Discord in the morning, first of all, I will post the expected moves the evening before. So when I get those levels, the expected moves, daily and weekly expected move, I'll post that sometime in Discord the evening before, and that is for the daily expected move for the following day, as well as the same weekly expected move every day. That doesn't change. So I do post that. I post that the day before, and then in the morning in Discord, I do post the index relationships that I'm using. ES to SPY, NQ to QQQ, those ratios, and that is what I use to show that's how I calculate where to put the SPX and SPY levels on my chart with the index relationships. I posted the preliminary number somewhere around 9 a.m. and the final number somewhere around 10 a.m. I was a little bit late this morning, very busy trading. Now, as far as the Spotgamma levels, I do not post those, if that's what you're asking. All right, Caesar asked about the AM settlement. Let's go back to the Thinkorswim. When I trade, SPX longer term, I will typically trade the AM settlement. I plan on being out, and that's selling premium, and I will be out long before the expiration. All right, so let's just compare open interest for the AM settlement. And also, I think a lot of institutional traders would use the AM settlement. So compare open interest. So in the thousands typically. Let's compare that with the PM settlement. So I would say there is more open interest. You know, just as a quick glance, more open interest in the AM settlement than the PM settlement. All right, so again, I think the institutional traders are using the AM settlement. And again, when I'm trading SPX longer term, I'm typically using the AM settlement just because there's more open interest. All right, Daddy Longlegs asked, what are the blue, orange, and white lines on time series? I'm not sure I understand your question. If you're asking about Hero, which has orange, blue, and white lines, I suggest you go back and watch the earlier part. Let's go back to Mag 7. White line is price. In this case, it is for QQQ. Let's take a look at S&P 500. So in the case of S&P 500, the white line is price for SPX. Calls are showing, the orange line is showing calls. Rising orange line, this is showing in terms of delta, the direction. Rising orange line indicates traders are buying calls. Blue line is for puts. Again, showing in directional in terms of delta, traders are buying puts. Call buyers much more aggressive today. All right, so Caesar asked, do you understand how the expiry works on AM settlement? So my understanding, it is based on the closing price, or actually the opening print for SPX, and that may take some time. That is based on taking the opening price for all the stocks in the S&P 500 and coming up with that number. All right, so Caesar, I hope that answers your question. I would not be in any position with an AM settlement anywhere near Friday morning. I would be out days before. All right, Rainy Days, Abu, welcome. Anurag asked, can you offer a discount for Spotgamma? I'm sorry, I have no way of offering a discount for Spotgamma. But note that Spotgamma does provide a 7-day free trial. So definitely worth taking advantage of. I would wait until over the weekend, sign up so you have Monday through Friday. Again, Spotgamma offers a free 7-day trial. All right, folks, my time is up. I want to thank you very much for your questions. Daddy Longlegs, one last question. I've got to wrap it up. When looking in Hero, does that make looking at the total in make more sense than looking at calls and puts? Not necessarily. Just to begin, I like to show the total signal, but the calls and puts gives a little bit more refinement to what I'm looking at, a little bit more information, but both are great. All right, everyone, again, thank you very much for watching. Thanks for your questions and comments. I love it when you all ask questions. Hope I answered everyone's questions. And I will see you tomorrow. Thanks again. Bye.